I believe that we're ready to enter the meeting. So we'll open the April 26th meeting of the Finance Committee of the Ogdensburg Bridge and Port Authority. And primary business for today is to review the financial information as of March 31st. I wonder, Patty, whether or not we can turn it over to you and ask you to highlight what you think is appropriate on the reports that we have.
Looking at the statement of financial position, our accounts receivable are at $100,760. 93.7% of that is either current or 1 to 30 days. So we're still keeping well above 90% on the accounts receivable coming back in the door. Our grants receivable are at $200,611. It includes both an FAA and a railroad grant receivable. The railroad grant receivable, $26,000, is for one of our vendors, VHB, and we found that we could get their invoicing reimbursed for us on the Racket and Grass River. Yes. So we have at this point 26,000 outstanding. It appears that the 174,000 that's been sitting on the books for over a year has been duplicated since the policy for entering grants receivables changed. A couple of years ago, they were putting in what they expected to receive in the coming year at the end of the year. In the last year and a half, they've changed to say we'll only put in what we know we're going to get back. So if we're sending an invoice to the state for $26,000, then we enter it in grant receivable. We didn't, apparently the thought was they didn't want the grant receivable number to become $16 million just sitting on our book. So it was decided a while ago that they would just put it in as the new money coming in.
And would a decision like that have been made by an accounting firm or by the in-house financial staff at the time?
I think the in-house financial staff, it might have had some influence from the auditors to not have a receivable of a great sum of money. And that may have been what started it.
That makes reasonable sense to me.
Yeah. But what happened is we ended up with this 174 sitting there that was then re-entered when the invoicing actually took place. So we will have to make an adjustment for year end for that $174,000 to bring it in line with what is actual. Our assets are fine and they go along as they do. Other assets are deferred outflows of pension and OPEB. This $650,000 will change at year end for the new calculations that we get from the actuarial firm Armory Associates. So it should change, and you'll see that for the April financials. Going down to our liabilities. Our regular liabilities at March 31st were $942,000. We found that there were some invoices that were due that hadn't been entered. So for year end, we entered a number of invoices. Since then, we have paid $341,000 for our payables. So we are down to about $600,000 to $700,000. So we're keeping it down to the $600,000 to $700,000 range for regular payables. New York State retirement.
We were at, what was it, a little over 900 last month? So we're up 200,000. You're saying 200,000 accounts payable being entered?
Couldn't do that one. I know there was some GPI invoices that probably were close to 80 to 100 that had not been entered. They had been in the project file, but never went to accounts payable to enter them into the actual payable file.
Remind me what GPR is.
They're the engineers on
Under the engineering firm that doing construction inspection and design on that project. I think would be construction support bills.
no, they're in the site registry number.
So
So there were a few that had gone into,
those were most of that design was done either 2019 or 2020.
it may have made it into the, just on the cusp of March, April 2020.
But most of the bills we're getting from now
Right.
are
For
construction.
construction inspection.
And those are reimbursed.
So we're not in the place where, what was it, a few years ago, invoices billed, not being processed within 20 days. It's not occurring.
No.
No, that's not. It was just, it was a one-off incident, if you will. And what we did for March 31st was we swapped duties out in the back. The accounts receivable clerk reviewed all the accounts payable, and the accounts payable clerk reviewed all of the accounts receivable, so that the person who puts their eyes on the information every month was not saying, yes, this is fine. And each person had to go find every invoice to make sure that what was on the aging report actually did exist in the system. So we sent that on to the auditors, and I believe they were quite impressed with that. And it's transparent.
Right.
You know, we can say it wasn't the same person who did the same task.
So Patty basically shut down our operations for a good part of the
Okay.
day. And, you know, things were cleaning up, we're improving things and organizing that. She taken me with that, I do that, I thought. That, it was, we didn't get it right when we wanted to, but
You got it.
we got it.
That seems like such a constructive thing to do, really go swoop out the comments.
And I know it was mentioned to me, oh, we're getting blamed, but well, in a sense, you might be being blamed, but much better your coworker finds it than the auditors come back and say, where did you lose all these invoices? They ended up in project file and not in accounts payable. You don't want the auditors to find that. But then you can say very transparently to the auditors, this is what we did.
Good. Thank you.
Of the New York State retirement, $290,000. $75,000 of that was paid on the 19th of April. So we have made our first foray into getting rid of that. The accounts payable, Tiger and bridge repair. The February statement had 1.227 million owed. That was paid on March 2nd. This is the new invoicing for March that has just been paid.
We just paid today.
So we are back down to zero. We're keeping up with that.
Mhm.
Another thing that we're doing, and we do it all the time, but we're getting more and more diligent about saying we received, say, 131,000 in the CARES Act. So we're going back and making sure that even if it's money we received because we've already paid the invoice, we're looking ahead. What can we pay with more CARES Act money that will come back to us? So we're keeping airport, which is freeing up the money that we're spending in our regular payable. We're not feeling a pinch right now because we've got a good flow going of the money coming back from the CARES Act to repay CARES Act. And at this point, we still have $102,000 in the PPP that will last two-ish payrolls. So by the end of May, we will be done with the 2021 award of the PPP. But that also is freeing up money so that we can keep the accounts payable in check.
Mhm.
Any questions on the statement of financial position?
So I wanted just to ask you to comment on the status of working capital. I think you addressed some of the specifics on it. It was prompted by the increase in income. However, would you talk a little bit about what you think is happening with the authorities working capital? Is there a trend? Is it any change?
We're receiving more trucks than we expected. So we do have a little bit more truck income coming in the door, and that is getting paid within the 30 days. We have more activity at the port than we had expected this winter. So ARS and Compass, there's more money coming in there than we had anticipated. So we're in a good place right now. We're not in a great place, but we're in a good place right now. We have the NNT loan payment of $38,000 is being reimbursed every month by the CARES. So that $38,000 when it comes out the door to NNT Bank is then invoiced for reimbursement. So when we receive the $38,000 back, it's there for us to pay the next month. And we're being able to do some of this. We paid out the money the first time, but now we're being able to turn over some of these reimbursements to actually be there to pay the next month. And that has been a great asset for us in being able to use what money we do get in for rent and other items to pay for our regular issues. So we'll go to the actual versus budget for the bridge fund. This is pretty much done. It's draft only because I know there will be some journal entries that will have to be done for year end. Our truck traffic is much stronger, and we went very conservatively when we internally redid the budget after the pandemic started. We assumed we would get this.
Good question. I can't remember, did we assume that, we started getting cars, which income in July maybe? Remember, we went by percentage.
No, we had pushed it out to August.
Okay,
September.
Okay,
Yeah.
I couldn't, at first we thought, okay, so we did push it out, so those numbers are conservative, and they'll keep staying that way, right until at least September.
Mhm. The rental income, the negative balance there, of course, is duty-free. We will be billing for the minimum amount that duty-free is supposed to pay by contract in May. I believe it's around $80,000 to $100,000, the new amount. I believe that's their minimum payment to it. Our negative balance in other income is advertising income. We have none connected. Our salaries and wages, we worked hard. We had the summer help last summer, go home a little early. The seasonal crew was let go. We didn't use nearly what we thought we would use in snow plowing this winter. It wasn't nearly as hard a winter as we thought. And we had moved some of the industrial development salary to the industrial fund. So we are a little bit under budget there. We knew going in that our payroll taxes and employment benefits have not been budgeted properly last year. So this is not, it should not be a surprise. The insurance, I think, was not budgeted properly last year. We do have the overage. We also do not have the prepaid expense. We pay invoices when they come in the door instead of this prepaid amount that we never really prepaid. Interest expense is down because the wind turbine line of credit was budgeted in the bridge. but it's being added in the wind turbine, category. We kept our maintenance expenses and our bridge maintenance expenses down. Some of the bridge maintenance has been included with the Tiger grant. Some of it we're pushing out. We're pushing out a lot of our maintenance expenses if they're not absolutely necessary. General expenses are up. Part of it is maintenance agreements, and part of it is a legal fee. But I am concerned that the possibility that we are seeing overages in one area and great under expenditures in another area. We have three categories: maintenance agreements, data processing and accounting services, and professional services / engineering. I'm thinking that some of these budgets were made assuming one thing, and that a vendor, when the invoice actually came in, was put to a different category. So these numbers may just simply be in the wrong category.
Sure.
And that I will be looking at as we go through the year end.
And that'll work there. As, another year.
Yeah. And we'll know that this is supposed to be here, this is supposed to be here, and we can hopefully, snag some of these things that don't belong. Any questions on the bridge?
No, I don't agree with that.
Oh, okay, I'll go right to the the budget for the port fund. The rental income is still over. The balance from Veritas buying out their lease has kept the rental income a little higher. When we negotiated some of the new leases, I think the increase that the old budget had assumed because of the pandemic, we did not put in. So that has, in a sense, been chipping away at the Veritas loss. Our fuel sales and fare charges, of course, will be way down. The port operating, we knew that was going to happen with some of the items that they assumed that weren't happening this year. The wind turbine project did come in under budget on income, and that has been pretty static right along. Our other income is up, partly because the insurance proceeds that we received for building 14 on the roof, that added 86,000 to our other income. 11, sorry. Oddly enough, no funds were ever budgeted for the marine terminal. And so the marine terminal income that we've received has just been way over budget because there wasn't a budget. But that's helping offset the airport revenue that is not rental income, which is way down. So that accounts for the 126 above. The CARES Act, we just simply haven't been billing as we had expected we might. So that doesn't mean we're losing any CARES Act money, we're just not requesting it as we thought we would. The salaries and wages are up. I think there were some longshoremen, additional ships, that didn't actually even out as we thought we would. The payroll taxes and employee benefits, I think too much of what I assumed would be port fund is still in the bridge fund. So we're coming in here under budget, and the bridge is over budget. Our insurance, the liability insurance is okay, but the budget did not assume for, especially the airport, to receive any percentage of other insurances, the airport or the port. So we're seeing that that's over budget. Interest expense is down a little bit. Maintenance expenses down. The wind turbine we knew was going to be under budget. The utilities, we never included the solar payments in the budget, so that we knew was going to go over budget. And general expenses are actually under budget for the marine terminal, wind turbine, and the airport. Any questions?
General expenses, do you have categories that are specific enough to use? General is not just a catch-all.
No, our big ones are legal expenses, airport security, macro, telephone and fax, and the regular payments to OMLC.
Sure.
Not the additional ones for new business.
Are you satisfied to have these work together in the report twice in the single category and you will see them separately? The components of general expenses. No, I'm not budget.
Well, this coming year, what I was going to do for you, if you're amenable to that, is the budget sheet, that one-page budget that you received and the board approved. I'm going to actually do our month and year to date based on that, so you will see more of these, I think, broken out. So you'll see legal expenses, the professional expense that goes to OMLC.
To me, that sounds good. I could deal with it a little more.
That'll be helpful to just some of that, right? Other than just general.
It's been constructive to move to a one-page brief presentation than we used to.
Well, this is certain, before it was designed to. This is way better.
Now, okay.
Exactly.
But you will have a little bit more information on the new one. And like I say, it will probably add a few categories, but it's still only one.
Great.
And there may be changes by the time the auditors get done. It may not look like the same.
Sure. I don't think I have any more questions. I think that you've covered the things that I was curious to understand. Any more questions?
No.
Good. Is there any other business that the finance committee should address? How about a motion to approve? I would move. All in favor? Aye. You're adjourned.
Did you get